everyone here is an independent contractor.
Good.
So I try and encourage them to, at the very least, get the least expensive package of QuickBooks. But
Okay.
my accountant has said to me in the past, and also said to me last week when he completed my corporate, he said
Okay.
that his wife has been doing QuickBooks since it came out. And he said,
Wow.
you are one of the most organized QuickBooks, because I don't want them to do it. I do it myself. And he said it's
You
the
did
most,
yourself?
yeah,
Wow.
I do QuickBooks myself. He said it's one of the most organized and comprehensive QuickBooks. Like, I categorize every last purchase. I don't care if I needed a pack of gum because I got to go meet a client and I ran
Yeah.
into 7-Eleven. Not only do I put the $5.95 purchase on there, but I put what it's for and who the client's for, and I'm like super organized. I was audited at one.
I'm surprised because I don't
So
do my own accounting. I don't do my own QuickBooks. I have somebody else because for me it's a battle. Am I gonna do it working like on the business, or am I gonna spend that 20 minutes, half hour, 45 minutes, go see a client or go meet with somebody
right,
who I
right.
can get a client out of? So for me, I'd rather pay somebody for $5, $6, $10,000 a year, whatever it is, and have them do it and so forth. Then I can.
Yeah, I just found that when I was doing that, for
Mhm.
example, my last accountant before the one I had, everything was categorized based on what she thought instead of what it
Okay.
was. And the
Really?
account before that, I paid for QuickBooks, and they categorized everything on what they thought, and not picking up the phone and saying, hey, what are these couple of purchases, or what are these expenses, and and how should we categorize them? They just took it upon themselves and said, no, you can't do this, can't do that, can't. And so I'm like, you know what? I'm going to learn this myself. Not that I want to be an accountant. I don't want somebody telling me, oh, no, you can't do it that way, because most people I have found,
Mhm.
most accountants are really tax preparers. They don't really tell you what is deductible. I have a book this thick about taxes, and I'm the guy that just open that book and go, can I do this or can I not do this? What can I write
Ordinary
off?
and necessary. Yeah. Everything that's
Yeah,
ordinary and necessary. That's the only two things you have to remember when it comes down to write off. What's
yeah.
ordinary and what's necessary for you to run your business.
Just keep in mind when
And
they show up, you got to repeat everything we're talking about. You have to do it
absolutely.
again.
And I probably have to repeat it 10 more times after they show up. That's
Yeah,
fine.
yeah,
I'm cool with that because uh, uh, I have a background in teaching, so I taught math for a while to high school kids. So I kind of understand, and like I always say, people gotta see something 7 times before they see it for the first time. So you have to repeat yourself,
very
loud,
interesting.
soft, yeah, in different manners. So yeah, yeah. But it's interesting that your previous accountant would classify stuff without having a conversation with you, and that's why I kind of find off putting with a lot of CPAs.
Yeah,
They want to talk to you and talk at you instead of having a conversation and consulting with you to say,
right,
Joe, let me understand how your business works.
right,
Yes,
right.
yes.
Yeah. I mean, if I have to take somebody out, I had an accountant years ago said, you can't write off car washes. I'm like, wait a
Yeah.
minute. I have 4 manuals, because my dad wasn't a real estate broker, so I had to learn this from scratch. I didn't buy a
Scratch up.
franchise, so everything I
Mm-hmm.
did, I had to learn from scratch. And so somebody says you can't write off car washes for your car. I'm like, wait a minute. Every book I have here teaching me how to be a broker says when I meet a client, my car's got to be shiny and clean. Because
Mm-hmm.
back in those days, you didn't follow somebody. Everybody got in your car. So your car had to be
Okay.
cleaned inside and out. And
Mm-hmm.
and now you're telling me I can't write off car washes. That was my first inkling that this person just wanted to do a quick slam dunk return and really wasn't interested in me. Was just interested in, like, wait, I got 95 other clients or 500 other clients. I don't have time for this nonsense. I just want to fill out the forms, get paid, and move on. And I said, you know
Yes,
what? I need an advisor. I don't need
absolutely.
preparer. Preparer, I can go to H&R Block and go, here's all my
You
stuff.
could do it yourself.
You know?
You could do it yourself. Yes,
Yeah, I can hand my QuickBooks literally off to anybody, and they'll take care of it.
Yeah.
And I met my. Yeah, go ahead.
Go ahead. Go ahead.
Now, when I met my mother-in-law, I was starting in business. What's up, Sal?
Hi.
And
Mr.
and
Sal.
my mother-in-law had a car that she was paying for, and I said, "You're owner of a pretty well-established corporation. Why are you paying for your own car?" And she said, "Well, it's an answering service, and we only answer phones. So how can I get a company car?" I said, "Didn't your tax preparer ever tell you that you need a car to get around and go meet clients?" She said, "No, nobody ever told me that." And so that was when I came to the conclusion very early on, and I'm in business 39, almost 40 years. And I came to the conclusion in my very first year of being in business that I need to find out from advisors like what I can and what I can't deduct, and what I can do and what I can't do, not go to a preparer just to, because I've gone to people that have been CPAs and they go, "Oh no, you can't do that." It's like, wait a minute, what did you just say? Reasonable or necessary? What was the term you said?
Ordinary and necessary.
Ordinary and necessary.
Ordinary and necessary.
So if it's up to me, I learned a long time ago, it's up to me to decide as a business owner, is this necessary for my business? Not up to the IRS to determine if it's necessary. It's up to me.
Hi, Joe. Sorry, I was on mute.
Yes, okay.
Yes, Joe. I go to Hopton for notarizing my papers.
No kidding. Oh, you
Quite
guys know
often.
each other.
Yes,
How cool is that?
It's like his office is like 3 blocks away from my office. So I go to him so many times I see him in his office for notarizing.
That is very cool. I did not
Small
know that.
world.
I thought this was first timers.
Yeah.
Small
Very
world.
nice.
That's why you should always do good.
Christian and Jenny, this is my friend Hopton Scott. He is an advisor that's in my networking group. You're looking at Jenny and Christian as two producing agents in the office. It's Felicia Taylor. Hi, Felicia.
Makes sense.
Hi. Hi, John.
I'm sure a few more people are going to jump in, but in the meantime, it's 12:03. Today is, wait, I have to get closer. Sorry. I have to edit that part out. Today's September 18th, Lunch and Learn. It's a Wednesday. We have a special guest today. His name is Hopton Scott. He is a business advisor, tax strategist, and he has a great line. He's in my networking group, and he said, "You earn your money, you should keep it." I think that's a great tagline. And Hopton Scott is here to answer questions about taxes. Also, if you have any questions about business structure, what's deductible, what's not deductible, different things like that, I think we would have an open discussion today. So welcome, Hopton Scott. Tell us a little bit about yourself.
Thank you, Joe. He said, tell you a little about myself. We only have 1 hour, so I'll make it short. So again, the name is Hopton Scott. You can call me Scotty. That's what everybody calls me. I'm the owner of Scott Income Tax and Advisory Services. We're located in Mount Vernon, New York. I am an IRS enrolled agent, so I do taxes. Behind that, I studied accounting. That's my first degree, and also my MBA is in finance. Prior to this, I held all the series license that allowed me to sell the variable products as well as life insurance. So those would be life, accident, and health license, property and casualty license, Series 6, Series 63, and Series 65, as well as a master's in life insurance. And I specialize in retirement planning for the small business owner and individuals. So I sold life insurance with Prudential for about 7 years. That's the career I did prior to opening up Scott Income Tax. And prior to that, I held 2 real estate licenses, New York and New Jersey. I worked with the Yellow and Black Company, Wycott, in New Jersey for about 4 years. And I worked very briefly with Keller Williams for a few months. So I know, I kind of understand where you guys are, know some of your pains, know some of your frustration, and I take my hat off to you guys for staying in the business, especially somebody like Joe's been doing this for like what, 35 years now, Joe?
25.
25. I don't have the gusto, the strength to carry on so long. But so after I left real estate, I got into, let us say, investments. And Joe and I were talking earlier and about advice coming from your tax preparer, etc. When I was selling life insurance and all these investments, my tax preparer never said to me, what are you going to do with your money? Why are you paying so much taxes? What's deductible? How can I avoid paying taxes? Because remember, tax evasion is illegal. Tax avoidance is perfectly legal. So if you fail to report your income accurately, that's tax evasion. If you fail to file an income tax, that's tax evasion, especially if you have legal requirement to do so. That's tax evasion, and the penalty is 1 year in prison for each year of tax you do not file. But if you take advantage of the deductions allowed, like miles you drive on your car, like the cell phone you use for your business, that's tax avoidance. And it's perfectly legal. The idea is to keep your tax, your adjusted gross income, to as low as possible, right? So back up. So my tax preparer never said to me what you're going to do and so forth. So while I was doing my MBA, the professor said to us, how many of you guys can do a tax return? This, and 25 of us in the class, 3 hands went up. And he said, you guys are joking. How could you be giving people tax efficient strategy and can't read a W-2 or a 1040? So he said, okay, H&R Block has a good school, you should go learn it. So I went to H&R Block for, I think it was 10 weeks, learning tax preparation. And at the end, the lady said, we're going to prepare you guys for the state exam, the school exam. So I asked, who prepares us for the state exam? Because remember now, I am coming out of the investment business and I had all these licenses, these federal license, these state license, etc. She said, you do not need a license to prepare taxes. I said, what? I said, no, you don't need a minimum qualification to prepare taxes. I said, voila, I just found my new business. So I'm going to marry the idea of tax preparation with advice. And I'm going to be asking my clients all the tough questions that my preparer never asked me. Like, how are your kids going to go to school? Do you have a 529? Do you know New York State and almost all states allow you up to $10,000 of deduction for opening a 529 for your kids, etc., etc. So that's what brought me to, in 2017, I opened Scott Income Tax and Advisory Service. The emphasis is on the advisory services, not necessarily tax preparation. In 2019, I got my enrolled agent designation. Now, an enrolled agent is to taxes what a CPA is to accounting. So even though I know accounting is not my specialty, I studied it in high school, I did it in college, I am familiar with debits and credits, familiar with QuickBooks, etc., but not my cup of tea, because accounting looks backward. Finance and advice looks forward. There's a reason why the rear view mirror is smaller than the windshield. So I look forward. The accountant will tell you what happened last week and focus on debits and credits. I focus on flow, cash flow, and how we can efficiently manage the drivers of revenue. So that's where the advice comes in for small to medium-sized business owners, in that I will look at what the accountant is doing and I can say, Sal, if you continue on this path, your business is going to run out of money in 3 or 4 months. The idea is to help you have a growing and successful business. So, 10 minutes of my rambling. Joe, also, I'm not sure how much, when I was in the business, we used to drive around a whole lot. Not sure how much of that you guys are doing now. But I think last year you got 60, I think it's 63 cents per mile.
60 cents.
60 something, yeah, 60 cents or 63 cents, I remember, per mile. I used to use an app called Mile IQ.
We all use that here. You got a better one?
No, that's it. Yeah, that's what I used to use. Mile IQ. It tracks your miles, and you could categorize them: business, pleasure, business, whatever it is. And at the end of the year, it produces a report for you, and that's a report that the IRS will accept based upon your driving, and that's deductions
Yeah.
for you.
I encourage everyone here to get it, whether they do or they don't. I'm not sure who uses it and who doesn't, but it's really important. I mean, right now I've got a couple agents that drove here, and the trip, because you're an independent contractor, your house is your office. So from your bedroom to whatever room in your house, that's your commute. So if you leave your house and drive to the office, that is a legitimate drive that is deductible. You go from your office to meet a client, all those miles should be tracked. What you can't do to the IRS is say, I drove 20,000 miles, 4,000 of them were personal, the other 16 were business. They're going to go, sorry, we are not accepting that. But if you gave them that report from Mile IQ and legitimately has all these are my personal drives and all these are my business drives, 16,000 miles was legitimate business and 4,000 was legitimate. They look at the report's that thick. You gave us some sort of record that you've been keeping track. That suffices with them. Like I said, the IRS, they'll accept that you did your homework. They're not going to question and pull through page 3 and go, wait a minute, this drive, you went to the candy store instead of to, it's not going to be an issue when you keep good records. And Mile IQ is really important. I remembered my question, by the way. A new agent coming on board. What is the threshold, do you feel, Mr. Scott? Should they stay as a doing business as, LLC, S Corp? What are your feelings on running a real estate business? Should I stay as an individual? What are the benefits and drawbacks? Should I become an LLC, benefits, drawbacks, or an S Corp, benefits, drawbacks, if you don't mind?
Okay, no problem. It all depends. So here's my advice when I used to, when I was allowed to open businesses for people, because the attorneys now get on our cases, and because of what they call a BOI, beneficiary owner information, they say that people who are non-attorneys are doing what they call unauthorized practice of law. They don't want us to open business for people anymore. But here's my advice I give to folks. You're just starting out, you're not sure what's going to happen. You may want to just go DBA, doing business as, which in our case here in Westchester County is $35 at the county clerk's office. If you realize that, okay, I love this business and I want to stay in it, you can go up to the next level. Remember, an LLC is basically what we call a naked baby, a limited liability company.
Naked baby?
It's a naked baby. Yeah, it's a sandwich until you put clothes on it. So an LLC, an SMLLC, single member limited liability company, files what's called a Schedule C. Joe and I decide to form an LLC. By default, that becomes a partnership. We could also be asked to tax as an S Corp, right? So there's DBA, there's LLC, and then there's corporation. Of course, there are other forms of business, joint ventures, and all that kind of stuff. But a corporation now, you could form a corporation and then be asked to be taxed as a subchapter S corporation. You form the corporation first, which by default is a C corporation, and then you fill out what's called a 2553 for the state, and the number is slipping me for New York. 2553 is for IRS. I don't remember the number for New York State. To be taxed as a S corporation. The S corporation is a filing status. It's like married, single, divorced, widowed. A corporation could be taxed as an S corporation. A LLC can be taxed as an S corporation. A partnership can be taxed as an S corporation. Subchapter S, meaning it's a flow through to the individual share owners for S corporation, in that Joseph Baratta and Company, a real estate company, doesn't pay tax at the company level. What Joseph Baratta and Company makes flows through to the individual owners, which are Joe, Sal, and Jennifer. they get that money in accordance to the agreed share. Each year they get what's called K1. And on the K1 will be the amount of income or loss, as well as the basis of what you have in the company. Remember also, the money that comes from the S corporation is not subjected to the self-employed tax, the FICA. So therefore, you must run a payroll. You must file the 941s every quarter, the NYS 45 if you're in New York, and pay that money to the government. So back to the original question. You just come into the business. I really wouldn't encourage you to open a corporation or S corp immediately, because you're going to be faced with keeping good books, filing those payroll reports, and paying your tax preparer to prepare a separate tax return called a 1120S. Maybe $1,500, $2,000 to file that return. If you're, on the other hand, a LLC or just a DBA, it's a Schedule C. You don't have to file the payroll reports. You don't have to do any payroll, and it's a Schedule C. It's one sheet of paper. Well, in most cases, some cases rather, 2 sheets of paper attached to your tax return. It's not a separate return per se. So, as I say, it depends. But what I would recommend anybody coming to the business, brand new, spanking new, start at the lower level. Start by doing a DBA or an LLC before you get up to the S corporation level or the C corporation level or something like that.
So just as a information, when you're doing a DBA, doing business as, let's just say you want to be Jenny Rosato Real Estate. You go to the county clerk, and it's $35 or $45, whatever it is. You fill out a single piece of paper. It says, I want to be a DBA, doing business as, and now you're an official business. So that is an official business. And when I pay you, I can pay it to the business. I can still write you as an individual because you're still an individual. And that just gives you that self-employment tax. What's a self-employment tax, by the way, as an individual, New York State?
Remember, no, the self-employed tax is the FICA, which is the Social Security and the Medicare. When you are your own boss, you pay the full amount, 15.3%. If I'm an employee to Joseph Baratta, Joe will pay half for me, 7.65, and I will pay the rest. As a self-employed person, you pay the entire self-employed tax. The income tax is separate. Remember, no, income tax is levied on the net income. No, sorry, self-employed tax is levied on the net income. Income tax is levied on your adjusted gross income, which could be including income from other sources, your W-2, your 1099-Rs, your whatever it is, money you got from, you know, the investment in Robinhood or so forth. So, but the self-employed portion is 15.3% of the net income.
Right. So even if you don't make a penny, you still have to pay a self-employment tax if you're filing a return as self-employed.
If the net income on the Schedule C is positive, then you're going to owe self-employed tax, the net income. So you collected $10,000, your expense is $2,000, the net income there is $8,000. You're going to have to pay self-employed tax on the $8,000.
Right.
All right. And you also get a little bit of adjustment. The government gives you about a 3% credit for being your own boss. So you get back a little bit of that self-employed taxes, which is about, let's say, about 3%.
Is there a threshold where you would say, okay, you're a DBA, and now I think you should switch over to either being an LLC or an S corp? What would you say would be the threshold for somebody to jump?
Hard to say. Then again, as I say, it comes back to your objective. Why are you doing this? Are you doing this because you want to sell the business one day, or are you doing this as a hobby and you intend to grow it? Because I've seen LLC with millions. I've not seen DBA with big money, but I've seen people with LLC gross income of $1.5 million and $2.2 million on the tax return. If you want to take it to the next level and and hope to sell it one day, because if the business rests on your shoulder, you're in what Kiyosaki calls the S quadrant, you're self-employed, you're smart. So the entire business rests on your shoulder. The minute you're able to step out of that and be a business owner, which in most cases is a corporation, then that becomes much more valuable and you could sell that. Because if you're Sal Rajput LLC and everybody knows Sal, everybody knows Joseph, once you step out of that business, it doesn't have much value anymore. But if you could step out of the business and have the business running itself continuously, yes, that business is much more valuable. And most time in those cases are when you own a corporation, not when you're doing a DBA per se, because people associate the DBA with you, Joseph, and once Joseph is no longer there, it's a little bit of a less value to any potential buyer. Mm-hmm.
Right. Interesting.
No, I'm really enjoying it. Actually learned quite a bit, especially about the estimated taxes. The reminder on paying estimated taxes along the way to avoid a penalty at the end, and also about the SEP. And there was about the separate accounts. So that's also a very good tip that I learned.
Absolutely, run it like its own business,
right?
In a separate account.
And I really like your questions about like at what point should we move from your own name to an LLC or to a corp. So right now I'm just doing it under my own name, but at some point I will move up to an LLC when I feel that's the right time.
Thanks for watching our Lunch and Learn. I hope you're enjoying it. When you get a chance, you should go check out this book, Balancing Act. It's available on Amazon. Just Google Balancing Act, Joseph Baratta, and it'll come right up. It's available on Kindle. It's available in paperback. Get it, read it. It's not just for real estate people. It's for anyone that's in business wanting to function in their business and enjoy life. Get it, read it. Let me know what you think. Thank you.